Welcome back. We are now hearing from Cathie Wood adjusting her price target for Bitcoin down as we are at the end stages of the Bitcoin bull cycle, in my view. And in today's video, we're going to be exploring why I think we're at the end of the cycle. What are the other indicators? And again, short-term price movements does not indicate that we are still in a bull run, that we are not entering a bear market, that we have an extended cycle like many other people think that we that indicates, right? We are looking at the macro. We're looking at the zoomed out picture. We're looking at the entire cycle of Bitcoin and the rest of cryptos and also stocks. And in today's video, we're going to be exploring the Bitcoin mining companies that pivoted to AI. We're going to talk about the Bitcoin treasury companies. We're going to talk about the macro view of what's going on. We're going to hear from Cathie Wood. And today is going to be the last day that we ever talk about Internet Computer Protocol on this channel. So you guys are going to want to stick around and make sure you guys give this video a free thumbs up. Also hit the subscribe button. That way you never miss a new video. Again, we upload every single day. I'm just giving you guys my opinions on the market. You don't have to disagree. You can agree to disagree. That's totally fine. But let's be a little bit respectful down below in the comments. But I do want to hear from you down below and also give the video a thumbs up. Let's get into it. So we are now hearing about yet another delay in Grand Theft Auto 6. And while this doesn't necessarily have to do with the crypto markets, it does have to do with just delays, and things take longer than most people expect it to take, including the price targets of, $1 million Bitcoin, $1,000 MicroStrategy, and all of that. And so it is kind of disappointing to hear Grand Theft Auto 6 is being delayed yet again, but that could also indicate that we're going into a bear market. I'm just joking. Let me know your thoughts on that. But we are hearing more and more price prediction changes from the likes of the banks, from Cathie Woods, from right here on the Cryptoviser podcast. But we're going to start right here. JP Morgan is now predicting Bitcoin at $170,000 in the next 6 to 12 months and says perpetual deleveraging is behind us. And that's undervalued versus gold historically, which implies significant upside in the next 6 to 12 months. Now, this is from the Block Research. And effectively, I don't necessarily agree with this thesis. Now, could we pop to $170,000? Absolutely. But if we're talking about sustained growth and a sustained move to the upside, remember, we are at the end stages of the Bitcoin bull market in terms of days since the halving. And so far, the top of the market was in October of 2026. And so if we continue to follow the Bitcoin halving tracker from top of the market to bottom of the market, and historically in previous cycles has been 1 full year, almost to the day. So that would put us in October of 2026, basically when we hit the bottom of the market, right? People are already calling the bottom at $100,000. Guys, the market doesn't bottom out after one day. And again, that's the difference between them and us on this channel, because on this channel, we're talking about the macro. We're zoomed out. We understand that in the short term, there may be price movements to the upside. I mean, I called the top of the market, the Bitcoin market, in July, and we hit higher highs after July. But that doesn't mean that my thesis changed, because right now we are below, when I'm recording this video, we're below the July prices. And so it doesn't matter that we went maybe 10% higher than what my top call in the middle of the year was. That top call was a warning signal in my portfolio to start exiting positions, to start getting out, and all of that, the moves to the upside, that volatility to the upside, the new highs that we saw. This was all exit, like final exit liquidity. These were final exit warnings in the market. And some people listened, some people didn't. They're going to say, I'm going to ride this forever. And if we go down to 20,000, then I'll buy more. Well, you're going to run out of money by the time we get down there and get down to the bottom of the market, because it's going to take 1 full year. And all these other influencers, all the other YouTubers are telling people we're at the bottom. We just hit the bottom of the market. And I'm like, what? You're claiming that you are a market expert, and you're telling your followers that we hit the bottom of the market after maybe a week or a month of downtrend. That's not how bottoms are formed. In fact, most real expert investors and expert traders in the market, they will trade that volatility because they know you're going to keep buying the dip. So they'll buy in. And then when you're buying in and the price goes up, you're like, yay, I'm right, that was the bottom. Boom, they sell and it goes lower. And then you buy that dip and they buy that dip also. Then it goes higher and you're like, yeah, you see, we're going to reclaim, and then boom, they sell again. And so they're literally counter trading those people. That's who we are trading against here, right? And that's a really crazy game, especially in a downtrending market, because you can't fight gravity. And so you don't fight the trend. The trend is your friend in these markets. And so if we know that the market is going to downtrend for approximately 1 year, then what JP Morgan is saying here is just not accurate. Now, like I said, JP Morgan may be right in terms of a pop to 170,000, but I don't even think that's going to happen. And why the F are we listening? Like a few years ago, people were saying, well, JP Morgan, they can go screw themselves because they think that Bitcoin is fraud and fake and not real and manipulated. And now the same maximalists are saying, wow, JP Morgan is saying that we're going to have $170,000. Wow, JP Morgan is so correct. Guys, they're a bank. They want you to lose your money in crypto, because the more people who lose their money in crypto, similar to what we saw in the previous cycle, like there's a lot of people who lost their money in Celsius, Voyager, 3 Arrows Capital, BlockFi, and FTX that have never gotten back into crypto because they don't trust it, because they lost the faith in it, because they lost money in it. And even if they got their money back years later, they still have like the distrust of this whole trading ecosystem. And so this could be part of the banks like, yeah, you want to buy Bitcoin? All right, no problem. Hey, researchers, tell them that Bitcoin's going to go higher. Then everybody gets excited and saying, wow, JP Morgan said we're going to hit 170,000. I got to buy in, got to buy in, got to buy in. And then we keep trending lower. And then what happens? People lose their money. People lose their mind. And then what happens? The banks win. The banks are going to win either way. And so you have to understand the banks are trading against those bulls in the market. They literally are. Do you guys really think the largest bank in the entire world, and definitely in the US, JP Morgan, is sitting there like, well, we know that the Bitcoin halving cycle is over and that we're going to go 1 year to the downside, but we think we're bullish here. No, guys. They're literally trading against you. And so we are not on this channel, at least, we're not going to let that happen, right? We are sticking with our thesis. We're sticking with the data. We're sticking with these charts that show us where the cycle is going, where the trend is. But all of these other bulls are going to say, wow, JP Morgan saying 170,000, got to buy the dip, buy the dip, buy the dip. Meanwhile, JP Morgan is quite literally trading against them, and they're going to lose. The bank will win. So, pick your winner. Cryptoviser or JP Morgan. Anyway, just joking. By the way, Cathie Wood is now adjusting and cutting her longer term Bitcoin price target. And this is something to keep in mind, right? Because these Wall Street titans like Cathie Wood and ARK Invest, they have a much longer time horizon than these people on YouTube and Twitter and Facebook that are like, oh, well, look at the price last week. We went higher. And it's like, okay, but we're looking at the macro, which is the monthly, the yearly, what the trend is. And that's what these Wall Street titans are looking at also. And this kind of will tie in to the whole internet computer conversation in just a little bit, because this is the last video that we will ever discuss the internet computer. And we'll get to that in just a few minutes. But let's listen to what Cathie Wood says about her adjusted price target to the downside on the long-term trajectory of Bitcoin. Let's listen in.
Bitcoin down about 16%, I think, for the month now, past month. We're at what, 102 now, 103, something like that? Where do you think we're going? I know you have big ambitions for Bitcoin.
Yes, we do. I will say one thing that has shifted for us in the last few years. Stablecoins are usurping part of the role that we thought Bitcoin would play. So our bullish forecast out there is 1.5 million by 2030. Given what's happening to stablecoins, which are serving emerging markets in a way that we thought Bitcoin would, I think we could take maybe $300,000 off of that bullish case just for stablecoins. So watch that space. Stablecoins are scaling here, I think, much faster than anyone would have expected.
So I want you guys to hear what she just said, okay? $300,000 cutting off of the $1 million price target for Bitcoin by 2030. That means by 2030, which is about 5 years away, 4 years away, they're basically saying $700,000 Bitcoin because stable coins are taking over. Well, who's getting involved in stable coins? The banks. The banks And basically, the whole idea behind stablecoins that they thought Bitcoin would kind of fill that place was payments, right? But Bitcoin is not used for payments. The whole payment infrastructure has not picked up in any meaningful way for Bitcoin. And they're using stablecoins. And so that's where the money is. That's what the banks are focusing on. That's what the banks are interested in. They don't give a about crypto. They really don't. And so there's a lot of bulls in this market that are saying, oh, well, she's just saying that because of stablecoins. It's like, no, this all ties in together. This ties into JP Morgan telling the audience, oh, by 2026, we're going to hit $170,000. And people are going to be buying into that, right? Maybe it'll happen, right? Maybe it will. But if we just look at the data, we look at the halving tracker, we look at the cyclical moves in these markets, right? They're literally picking up from where Raoul Pal left off. Raoul Pal said, we're going to have an extended cycle. Even he doesn't believe this because he said recently that he was going to sell 30% of his some of his altcoins or cryptos by the end of 2025. So even he doesn't believe that we're going to have an extended cycle 100%. And so JP Morgan is picking up on that and saying, oh yeah, the crypto community thinks that we're going to have an extended cycle. Let's tell them that. Let's give them some research, and they're all going to say 170,000, buy this dip, buy this dip, buy this dip, buy this dip. And people are going to buy the dip, even though the trend is down. And going into the stablecoin conversation, Coinbase is now proposing rules allowing non-issuers like Coinbase, because they just transact in the stablecoins. They are not issuing the stablecoins. Circle, Tether, they're issuing the stablecoins to offer stablecoin interest under the Genius Act. Now remember what Cathie Wood just said, that stablecoins are picking up where Bitcoin is not working or is not gaining momentum, right? And that's with payments and holding coins. And in one of the market structure bills, the banking groups are calling for blanket stablecoin interest prohibition, basically going against what Coinbase is saying here, right? Basically saying if you're holding a stablecoin, you should not be able to get interest on it. Why do you think the banks don't want you to get interest? Because they don't want you moving all your money out of the bank and into stablecoins. They want to control everything, right? And so Coinbase is pushing back on this, saying, no, like, we're not an issuer. We should be able to give interest on stablecoins. And obviously, I think Coinbase will win that fight, hopefully at least, because that's going to be beneficial for us versus just putting money in dollars and not getting anything back. But it also would be a net negative for the banks. So the banks are going to fight it tooth and nail. Meanwhile, just to kind of give some more insight into this peak euphoria in the cycle, because if we look at the psychological market chart, I believe we're already past complacency phase for many different reasons that we've talked about extensively on this channel. And so if we're past the complacency phase, that means we already hit euphoria. And I believe euphoria was in July when all of these Bitcoin and Ethereum treasury companies started popping up. A lot of money was flowing and moving. But again, the further we go, the closer we are. So even if you don't think that we've hit euphoria yet or complacency yet, the further we go, the more risk there is of falling off this cliff, which I already think that we're in the fall off cliff mode. And so people who watch my videos on a regular basis, you guys get it. You guys understand it. You understand the macro, and you probably positioned your portfolio appropriately. And again, I don't care what you invest in. I really don't. And I don't think you should care what I invest in, because my thesis is still my thesis. I can still be bullish on a crypto or on a stock or on a company and not own the stock or crypto or the company, right? Because that's just how things go, right? I mean, I could love a specific type of food, but that doesn't mean that I'm going to go and be the farmer that's creating the food, right? I mean, but again, this is the, low IQ of a level of a lot of people who just say, well, Cryptoviser, you're wrong because blah, 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 blah. And it's like, okay, but the macro thesis I've been correct about over and over and over. Jim Chanos highlighted New Era and Energy Digital, which is a NASDAQ traded company. They said New Era has secured a land option for 3,500 acres in New Mexico to build out a 7 gigawatt AI data center hub, combining over 2 gigawatts of natural gas and 5+ gigawatts of planned nuclear energy. This is the New Era's first wholly owned development. Initial power delivery is expected in 2028. Now, Jim Chanos highlighted this, saying a $150 million market cap company has just announced development of a $100 billion AI data center. And yeah, it is. It's actually less than $150 million when I'm recording this video. And they're announcing a $100 billion build out in data centers. And by the way, you can actually go look at this company's SEC filings and look at their presentation. And I did that. And I was like, yeah, they're not even beginning to build these facilities. Like they're still in like planning and engineering and, site survey mode. Like they're not even close to building. And now they're talking about 2028. This, in my view, is peak euphoria. This is like companies or crypto ecosystems announcing, we're going to do this, and we're going to do this, and we're going to do this. And it's like, well, what have you been doing the last 2 years in the bull market? I mean, effectively in the crypto cycle, this crypto cycle 2025, no major breakthroughs from a technological or technology integration standpoint in crypto. A few of them have, like Chainlink and the stable coins and stuff like that, but for the most part, nothing has happened, and none of these ecosystems have done anything. We're at the point where people just expect the price is going to go up because in previous cycles the price went up. I mean, we've covered this extensively on the channel, where the crypto ecosystems, they're like, well, in the previous cycles this happened and this happened and this happened. It's like, yeah, but there was also a lot more promise of new technologies or new integrations or new things happening. Here we are, another cycle gone. Ripple keeps selling their XRP. XRP has no major integrations anywhere. Their stablecoin really still doesn't have that much utilization or usage. And people are like, but Cryptoviser, XRP is going to be integrated in the financial system. It's like, it's not. And Chainlink was chosen by Swift, and Western Union chose Solana. So where is XRP in all of this? Where is Ripple in all of this, right? Again, these promises, you're going to wait 30 years for an integration of something. You're going to wait another 3 years to see this company potentially build out all of these facilities when the demand and supply imbalance is on the demand side with low supply. And so in a few years, you think that these AI companies and all of these chip companies and all of this, like, we're not going to have a supply demand balance or potentially inversion from where we are today? I mean, this is peak euphoria in the markets. And a lot of the people who are investing in these markets or analyzing the markets can't even see it, right? They're saying, well, Cryptoviser, we're not in euphoria. We're not past the euphoria mode. I didn't feel euphoria in the cycle. And it's like, the market doesn't give a whether you felt the euphoria or not. I mean, we saw people like real estate investors literally selling multi-million-dollar real estate properties in the middle of the year to go invest in Bitcoin at all-time highs effectively, and these Bitcoin treasury companies, which some of them are down 97% since July. But we weren't in euphoria then. That was just the beginning of the cycle, right? I mean, this is complete and utter ridiculousness. But again, I don't care what you do in your portfolio. I'm just sharing my opinions on this channel and my analysis of the markets. And that brings us to ICP. And today, this is going to be the last video we ever talk about Internet Computer Protocol on this channel. And the reason why is because of the sentiment, the ecosystem. Just recently, right, beginning of October, I told my viewers on this channel that I sold some of my ICP, and then I later sold the rest of it, right? Because this was, and still is, out of the top 50, the worst performing crypto year to date, right? Most of the year, you can see on this chart, ICP was down 50%, while many cryptos were up and hitting all-time record highs. And we had the release of Caffeine AI, which, by the way, isn't even living on the internet computer. It's an off-chain large language model that deploys on-chain. But there were no integrations. And I'm not going to go all into why I sold again, but either way, what I do in my portfolio is what I do in my portfolio. I stick by my portfolio. I don't really give a what anybody else thinks about what I'm doing in my portfolio. And you guys don't know what exactly my portfolio looks like or how vast it is or where I'm playing, in crypto or stocks or other types of assets. So yeah, I do absolutely 100% believe in selling into losses at certain points in the market, regardless of what the price does. But the same sentiment that I have seen on my videos where people are, I think they're bots, right? That they're coming on and saying, well, Cryptoviser, look at the price. Look at the price. What happened after you sold? You sold the macro bottom. I don't give a fuck. Like, I literally don't care where I sold. I made the decision to sell some or all of my portfolio position in this crypto, and I stick by it, right? The price went up. Okay, who cares? Why did the price go up? Well, I started to wonder, like, why would the price go up immediately after I post videos that I sold, right? Seems to me that that timing is a little bit off, right? Maybe there's market manipulation. Well, there may be market manipulation going on, because if you actually look at the data on chain, what we can see here, if we scroll down to the conversion rate, this chart shows the conversion rate between internet computer and trillion cycles, as well as the 30-day moving average, okay? Effectively, cycles are the unit, the y-axis represents the amount of T cycles per ICP token. Cycles are the unit of measurement for resources consumed by canister smart contracts for processing, memory, storage, and bandwidth. Since 1 T cycles equals 1 XRD, this chart effectively represents ICP to XRD, which is the exchange rate of internet computer coins into the compute money, right? So effectively, they're burning ICP to turn them into cycles, which pay for the compute on the network. Well, when the price started going up, what did we see happening here? We saw a massive move to the upside, right? I mean, massive. This is the 3-month chart. This is the 1-year chart, right? Immediately it went up. And so I question, okay, is there manipulation going on here? Are some of the whales burning ICP and converting them into the compute money in the network to artificially reduce the supply of the coins in circulation and artificially move up the actual price of the coin? And effectively, that's what it looks like actually went on. But whether it did or didn't, I don't give a to be honest with you guys. Like, I really don't care. Here's the deal. This crypto has been underperforming the rest of the market all year. And we are now at the end stages of the bull market. And people are coming on my channel just to say, haha, you sold the bottom of the market. You sold the bottom. You sold it. You're going to regret it. Guys, that's not how we invest on this channel. That's how I know that these people or bots are actually bots and not actual people, because people who watch my videos, you guys, you understand where we are in the cycle, right? And you understand the macro view. This is peak euphoria, because these same people who are like, well, you sold the bottom, Cryptoviser, so now we buy high and sell low. Well, are you selling at these prices? No, because they're going to keep saying that the price is going to continue to go up, even though we're at the end of the bull cycle. There's no actual major integrations. And a lot of the things that we thought were going to follow through would follow through. At the end of the day, the sentiment that I'm getting here from these bots or people or whatever, this is the same thing that happened in the previous cycle. When I sold ADA and I told my viewers, we're moving into a bear market, and literally the ADA ecosystem, they went berserk. I mean, they literally were paying their shills to make videos and saying how Cryptoviser's an idiot, Cryptoviser's wrong, all this nonsense. And because of that, we never talked about Cardano again. We never reinvested in Cardano. And this is the same thing that's going on here. There are literally millions of cryptos in existence that we can invest in that have clearer pathways to move forward. There's hundreds of thousands, if not millions of stocks that we can invest in. And yeah, sometimes we have to sell an asset and move on, right? All of the positive momentum and positive sentiment that we've talked about, and I sell my crypto, and that's how the ecosystem treats somebody who has been nothing but bullish on the actual ecosystem. That makes me even more bearish for the ecosystem, because it just shows that there's no difference between the ADA shills and the grifting and the ICP shills and the grifting. And this does not take away from the real builders in the ICP ecosystem, and because there are real builders there that are working their asses off to make this stuff work and build out the integrations and what they want to, succeed at and build. But it just shows like this is one of the reasons I want to get out of crypto completely by the end of the cycle, because I am done with this nonsense. There are literally millions of cryptos, and most of these cryptos do nothing, have no actual partnerships, no integrations, and people just shill them for years, even though the trend is down, even though some of these cryptos haven't reached all-time highs for years. But they'll still come back years later and say, well, Cryptoviser, are you still waiting for 25-cent Cardano after Cardano like pumps from 30 cents to 70 cents? And they're like, are you still waiting for 25 cents? It's like, no, I'm actually not waiting for anything, because I'm never investing in that coin again, because they still, to this day, have no cross-chain bridges, no stable coins, and the same thing goes for Internet Computer. And so if the ICP ecosystem wants to believe that the price is going to continue to go up, when there's still no stable coins, there's still no cross-chain bridges, there's still no chain-linked integration, okay, put all your money in the Caffeine AI basket, which is not even owned by you and has no movement in the ICP ecosystem. We'll see where this is in 6 months, but I don't think that ICP is going to be opposite the trend of the downward moves in crypto. There's no liquidity left. And when I see metrics like this, where you see ICP burning and turning into cycles, maybe it does indicate that they are integrating with some large players and that there is actual more data usage, or this could indicate that there's clear manipulation on the price just to prove Cryptoviser wrong. It's probably just whales that are trying to pump the price to say, well, Cryptoviser's an idiot. Maybe not. But anyway, moving right along, and yes, that is the last time we will be talking about ICP on this channel for many of those reasons and more. But moving right along, because there is a lot more to talk about, and we're going to start right here. Now, we've been talking about the quantum stocks, and one of the quantum stocks that we've talked about is Ionic, which is moving to the upside, right? $18 billion, even though they effectively make no money. This user, Common Sense Investor, said the stock is about to crack. This company has quietly diluted the living hell out of its shareholders direct from reviewing their latest fourth quarter 10Qs, which are SEC filings. In May of last year, they had 211 million shares. April of this year, they had 247 million shares. July, they had 296 million shares. And October, end of October, they had 354 million shares, which is almost double. It's about 1.5 times what they had a year and a half ago. This is an additional 142 million shares in 17 months, plus 67% increase. And it gets worse because the slope is accelerating. This is not stock-based comp normalizing. This is not controlled dilution to fund growth, he says. The filings literally tell you ATM share issuance, right? Selling shares on the open market, buying revenue through stock-issued acquisitions, evergreen equity plan auto ratchets the comp pool every January 1. RSU grants happen every single quarter, making insiders rich, and warrants are sitting as a future supply bomb. When you stack these together, it's obvious what's happening. They're using their equity to make insiders rich, he says, and to buy revenue. Ionic doesn't generate enough operating cash to fund the roadmap, so only the currency is paper. Now, this is happening, right, with this stock, according to this user. And what does stock dilution mean? It means downward trend in the price. But where else are we seeing this? We're also seeing this with MicroStrategy. Now, this user said MicroStrategy has about $50 million in cash, and in 2026, they're going to owe about $689 million in interest on their debt. It's not interest on their debt, it's the dividends on the debt. The plan has always been to sell more stock or debt to fund the interest in a quintessential scheme or PONZI scheme, right? But though still early, add to the equation, it's $3 billion issue zero coupons of, and 2029 convertible is at $672, and it's puttable at par on June 1 of 2028. I'm sure it will all be fine. Effectively, he's saying that this is all pretty bad looking for where the company is and what they are actually going to owe. Josh Mandel, who is a well-known MicroStrategy trader, used to be a bull. Now I think he's a bear on MicroStrategy. But he said in an open letter to the MicroStrategy board the following. And by the way, I want you guys to think about, as we're going through this is end of cycle mentality, in my view, because people are starting to realize that a lot of these things that they invested in did not perform or did not execute the way that they thought they would execute, right? This whole idea that Bitcoin will go up forever, there's going to be no bear market. That's BS, right? We know that's BS. But people believed it. And now they're starting to realize, that's not what's happening. Quantum computing, they're like, we're almost at quantum. And the quantum companies are like, no, we're like 10 years out from any viable quantum computing. And that brings us to MicroStrategy, right? So Josh Mandel, and by the way, we're going to talk about Iris Energy in a minute as well, because there's something really important about that we need to cover. He said, congratulations on the successful launch of Stretch, one of their debt facilities, and the best wishes on the successful rounds of liquidity. Despite the favorable conditions which would support funding solely the sales of Stretch, the firm has continued to sell shares of MicroStrategy to new investors at successively lower prices, with approximately $15 billion of remaining authorized stock issuance. The number of shares issued going forward will far exceed that which has previously sold, if only for the fact that shares have plummeted from a high above $540, average sale was around $400, to as little as $240 when he's writing this. Now, it's actually lower than that. It went down to $230. And we still have a long way to go down in MicroStrategy price. We'll get to that in a minute. He says, your decision seems to be simply increasing the number of shares to be sold since they are much cheaper. I would like to request a proxy vote for all shareholders, specifically seeking full cancellation of any further equity issuance or selling shares on the open market. I would have accepted the argument that shares need to be sold to pay for the preferred their debt facilities, but it turns out that the majority, of those monies were actually used to buy more Bitcoin, since this was supposed to be funding supply for dividends. He said, since this was supposed to be the funding supply for dividends, it can be viewed as your choice to store the capital in Bitcoin until sales can be made at the lowest possible distressed pricing. Thank you in advance. Effectively, he's calling for a vote to stop stock issuance. Now, that's not going to happen because it's really important that you guys understand. I have one of their filings here. Yeah, this is one of their SEC filings, which show you, and we covered this years ago, that they increased the total share count of MicroStrategy. Now, these are not all issued shares yet, but this is the top end, how many they can issue. They increased that from 300 million shares just a few years ago to 10 billion shares. Now, that doesn't mean that all of these are issued, like I said, but that means they can issue that up to 10 billion. And people like Josh, why does he think that MicroStrategy would increase their shares to 10 billion if they didn't plan on issuing and selling those shares in the open market? Of course, that's exactly what Michael Saylor was going to do the whole time. And I told my viewers, going from 300 million to 10 billion is a 30x. So they're diluting everybody by 30x. That's effectively going from $300 to like $1, right? And you can see that right here. Our authorized capital stock consists of 10 billion, 330 million Class A shares. And some of the preferred stock. But just recently, it says here, and this is a new filing from November. In addition, as part of our consolidation on November 4th, MicroStrategy filed a prospectus supplement under the existing automatic shelf registration statement from earlier in the year related to the offering of shares. One, shares of Strife, one of their debt facilities, having an aggregate offering amount of up to $1.6 billion. So they can still sell up to $1.6 billion. Shares of Stretch, up to $4.2 billion. Shares of Strike, up to $20.3 billion. Shares of Stride, up to $4.1 billion. And shares of MicroStrategy, up to $15.8 billion. So they're literally telling you that they plan on continuing to sell these shares at these current prices. And that's how much it would help them raise for Bitcoin. Now, it would be foolish for them not to continue to sell shares in the bear market or rotating into the bear market as prices continue to go lower. But I think that a lot of shareholders like Josh and a lot of others are starting to realize like, oh, like they are going to continue to dilute everybody. They don't care, right? Like they don't care. They're going to continue to dilute you until they own however many Bitcoin is their goal. And nobody even knows what the Bitcoin goal number is. Maybe 1 million, maybe 2 million, maybe they're just never going to stop buying. But this is bearish for the stock because as we downtrend in the Bitcoin price, we're also downtrending because they're diluting the shares. So you have a double whammy there. Now, on this channel, we have been betting against the price going up. We're basically betting that MicroStrategy can continue to sell shares. And by the way, these trades are making more money than even those ICP shills are pushing for ICP because it went up 200% or 100% in a week. Some of these trades are up hundreds and hundreds of percents. And this is betting that the price is going to go down. But again, this market is going to have winners and losers, and we want to be winners. And that brings us to Iris Energy. Now, we've been talking about these Bitcoin mining companies that pivoted to AI, and Iris Energy is one of them. Now, recently, Iris Energy has been, I don't know, it kind of looks like double topping here at this $70 range. And you guys have to remember, number one, we're at the end stages of the cycle. Number two, this stock has already done over 10x in just the last 6 months. And number three, things are already priced in, right? The market is always forward looking. And so once they announce their earnings, which Iris Energy just did, and their earnings just confirm everything that we already knew, the deal with Microsoft, their compute deals, how many gigawatts of energy they're going to pipeline and all of this, we already knew all of that. So them having an earnings call and everybody like, oh, wow, this is bullish. They just said this in the earnings call. It's like, yeah, but we already knew all of that. It's already priced in. There's nothing else. What else are we looking forward to? Why is the price going to continue to go higher? It's already priced in. Just because you bought at $70 doesn't mean the price is going to continue to go higher. And so the Pigeon 941 that we've covered previously on this channel, on X, he says, nobody wanted to hear me tell them to sell all of their Iris Energy at $75 because it clashed with your euphoric emotional psychosis. You will now enter denial, which is past the euphoria phase, right? Euphoria, complacency, then denial and anxiety and panic phase, right? And I agree. I mean, we're seeing this not just with Iris Energy, but with a lot of these AI plays, right? NVIDIA was just at, it was at 5 point something trillion dollars, and I think it was $200 at the top. And we're already down to 180 in just a few weeks, double top in NVIDIA. And people are like, no, Cryptoviser, it's just taking a little bit of a breath. Well, what does complacency say? We just need to cool off for the next rally. There is no next rally. Like, we are at peak euphoria and people are calling out the BS on these companies. He said, a good entry here at $60 is what people will say. He said, Pigeon is just a messenger. Have a wonderful weekend. And again, the Cryptoviser, we are just the messenger of our analysis and opinion. You could disagree with the opinion, and that's totally fine. This user, Couch Investor, said, I really hope most of you know how to read the Iris Energy earnings report. There would be no net income without $665 million in unrealized gains in financial instruments like capital calls and prepaid forwards. And effectively, right here, unrealized gain or loss on financial instruments, $665 million. Now, if you removed that $665 million from the September 30th earnings, this would be in the negative. And their entire net income would be in the negative. So they're doing effectively what MicroStrategy is doing and saying, well, our unrealized gains on Bitcoin is our revenue. But the market knows better. You, all of my viewers, well, most of my viewers, I should say, most of you guys know better. You know that that's bullshit. You know that that's financial gibberish. And that is what we're trading against. And so it was interesting because right before the earnings, I took out I bought a put on this stock, and I bought the put. I mean, it was within the last couple of days in the $70 range, mid $70 range, something like that, and it's already paying because it's buy the rumor, sell the news. The news we already knew about, all their partnerships, all their integrations, all the money that they're supposedly going to be making next year. But we've also heard about the risks. We heard from Jim Chanos, who said that they're taking on all the liability while Microsoft is just paying them to take on all the liability. That's not a good business plan. But people get in the euphoric phase and they're like, oh no, Cryptoviser, you're an idiot. You don't know what you're talking about. This is the best thing ever. They have a $10 billion deal with Microsoft. This is amazing. And it's like, yeah, it is amazing, but is there risk? Is there capital risk? What is the revenue and what do the fundamentals look like? Because on this channel, we talk about the fundamentals, not the pumpamentals, which a lot of crypto ecosystems talk about and a lot of stock ecosystems talk about. But if you understand the fundamentals, you understand how to take advantage of the pumpamentals, because the pumpamentals only work when they work. The fundamentals work all the time. And so with that, hopefully you guys enjoyed today's video. I really want to know what you guys think about everything we talked about. And, let's give a moment of silence for the ICP ecosystem. They lost another YouTuber here that will never talk about that crypto ever again. Hopefully you guys are doing well. Give the video a thumbs up, hit that subscribe button, and I'll see you on the next one. Invest responsibly, do your own research, and as always, crypto on.